Good afternoon, YouTube. Happy Wednesday to you all. Coming from snowy Ohio. Always have to mention the weather lately. We've had in the last couple of weeks where I've said it's, sunny and 60. Then we turned around. It was just cool, but rainy Monday. Now all of a sudden it's freaking cold and snowing. Anyhow, coming at you with episode 11 of the Robinhood Trading Challenge, giving your midweek update. Those of you that have been following Robinhood lately, they've had kind of like a lottery sweepstakes for their cash management that they're rolling out, where you could, do so many clicks, you are on a waiting list, and you can move up 1,000 spots, up to 1,000 spots a day by clicking on their little thing. Just basically, it was just generate interest and to try to get you up if you wanted to be one of the first ones when it rolled out. When they initially announced it, they announced it was going to have basically be like a savings account for your unused money. They were going to pay you 3% interest that would be paid out, I think it was monthly, on that. And basically what it is, some of the other apps have done this in the past, where, like, let's say you have, like, for example, I have about $2 right now that I don't have tied up in any stocks. It's just sitting there because, like I said, I'm getting away from the penny stocks, so $2 isn't going to buy anything substantial. All the money that I have for day and swing trading is currently tied up, which we've discussed. But instead of that $2 just sitting there, after the market closes each day, they'll basically put that in like a savings account for you. Because it's federally regulated, at the end of October, the feds came in and they dropped interest rates. So Robinhood dropped their initial, what they were announcing as a 3% interest rate down to a 1.8% interest rate. But you're still earning money off of something that was basically going to sit there and do nothing for you. Just to kind of give some background on this, we'd have to look it up, do some homework. I don't know if they are still actively doing this or if they have changed. But Charles Schwab did kind of the reverse of this. They're one of the more famous ones that have done this, where that's where they've made a lot of their money, isn't necessarily on the brokerage fees and everything, which they are now free trades on Charles Schwab. But what they would do is any money that wasn't tied up in a user's account at the end of the day, they would basically take that and invest it on their own and put it in their own accounts to raise money for their company. So now, instead of doing that, Robinhood's going to take that money and help you grow it. Obviously, if you don't have, like me, I've got $2, I'm going to earn nothing for it, but it's, maybe fractions of a penny, but it's going to add up over time. So that's great. They officially launched the test group today. So the first batch of users at the top of that waiting list that has now been opened up to them. I did reach out and send a message to Robinhood, fully expecting to not get anything back, and they actually did respond because I had asked how high up on the waiting list you had to be, if there were no bugs in the system, or when they worked out the bugs, how soon were they planning on rolling out the next group. It really got a generic response. Basically, they said that if you were high enough in the group, you would have gotten an email and an in-app notification. They said that it just depends on how glitchy it is. Or, I didn't say glitchy, but as long as they have no issues in the next few weeks, you'll be notified by email and, again, in-app notifications as your number gets closer to being able to go live with that. So that's kind of exciting news. So now that just a little bit of a way to kind of beef up your funds is that money, instead of sitting there unused, will now start to grow for you. So that's a big positive for the day. Now to give you an update on how we're doing since the market opened on Monday. We are down for the week about $6. We're trading around working around $152 currently. The big thing that hit us, if you've watched the news or heard on the news, financial news, the past few days, I've talked about it many times. My favorite stock that I have in my portfolio is Designer Brands, ticker symbol DBI. My very first stock that I bought. I have 2 shares. It's more expensive. Again, keep in mind, we're a very small account. We started out with $30. It was trading around $16.20, so it's not like I can fill up my account with that. Otherwise, when things like this happen, where they had a negative earnings results, they didn't make their targets, everybody bailed on them, there was panic, which any news causes panic, positive or negative, in a stock. And in this case, they didn't meet their earnings, so the stock dropped around $2 a share. So I was way down first thing Tuesday morning. It has started to rebound up. It's trading at around $14.85 right now, so it is steadily going back up. It's doing very well. The other stock that I'm buried in currently, as you know, we've been discussing these past few videos, which was my supposed to be my new swing trade stock, which is Cosmos Energy. That thing's been parked around $5 a share. I've got 4 shares. Last I checked, before I got in the car to head into work here, it was trading at $5.09 a share. I'm going to give it a little bit more time to see how it plays out, but I mean, given that that one is money, part of that money was supposed to go towards long-term trades. And for example, this designer brand that's going back up, this would be a perfect opportunity to jump in and get another share, but I have no funds to do that because they're all tied up in this Cosmos Energy bomb that went off a couple weeks ago here. So I'll give it a few more days, see how that one plays out, if it's going to go back up anywhere close to where it was trading, see if I can get any of my money back on that one. Otherwise, I might just have to lick my wounds, take my losses, and move on. If you're going to take a loss, it's December. This is the time to do it, I guess, because less you have to pay in taxes for the year. If you show a loss at the end, it sucks having to do that, but I guess that's the light at the end of the tunnel if we do have to sell out of that position and take a loss, which hopefully we don't. Hopefully it all works out for the best. That's kind of the update there. Nothing else new and exciting. The what was it, Sorrento Therapeutics, the free stock that I talked about the other day that I got, I was just going to go ahead and sell out of that when it settled. They've actually had some positive news lately, so it went from, I think it was $3.47 a share when I received it as a freebie from a Robinhood referral. It is now up to $3.89 a share, so I'm just going to let that bounce around and see how high it goes. When it starts dropping, then we'll go ahead and bail on that one. That's not something I'm even interested in keeping long term, but we did get some, something positive out of that one, so we'll see how that one tends to play out. Everything else has been kind of stagnant. We have some, some things are moving up a little bit, but they'll move down. So basically it's the week's about a wash, other than, like I said, we're down because of designer brands. And that's where it's important, if you listen to the experts in investing, again, it's really difficult being a very small account, but you shouldn't have any one stock take up more than 5% of your total overall portfolio. And because of the price per share on that designer brands, it takes up about 20%, 21% instead of that ideal 5%, and that's just one where as our account grows, that'll drop down. But that's why we were impacted so badly when that dropped, is because we have such a high percentage of our portfolio in that stock. So that's why you got to be careful with that. You want to average down. You want to diversify. That way, if one industry tanks, it doesn't affect your entire portfolio, that kind of thing, so that you avoid big hits like this. But unfortunately, as I mentioned, with a very small account that we're trying to grow into a large account, we don't have that luxury right now. The best we can do is take advantage of some of these freebies. Like, for a long time, it was about 65% of my portfolio until I got a free share of Uber from a referral link, and then that's the bigger chunk now. Is, well, no, they're about dead even now, because I think Uber's trading around $29, just shy of $29, and I've got $32 worth of designer brands, so they're about even. But that's something you want to avoid happening. That's about it. I will get out of your hair. Again, don't forget, hit that like button. Make sure you subscribe to the channel. I thank you. I got a couple new subscribers in here. Remember, my lady friend had mentioned that she will bake me a celebration cake when we hit 10 subscribers, that big 10 subscriber time. So tell all your friends about this channel. Let's get it built up. Let's get some activity in here. Again, make sure you like that. I've mentioned before, it's holiday shopping season, so if you're going to be shopping on Amazon or Target, I do have affiliate links down in the description. I am an affiliate partner. That is one way I'm looking to grow this channel and kind of be able to get some actual legitimate equipment, camera, microphone, any of that kind of stuff. And once I get into a place where I can have some kind of a recording space you know, to kind of be able to have a nice recording area. So make sure you like this, share it if you would. I know these kind of videos overall are not the kind of videos that are real common to be shared, but if you want to share it, please do. I appreciate that. It just gets us some FaceTime out there with more people that see it. More people can tune in and subscribe. Hopefully we are keeping you moderately entertained with these. Until then, I will be back with episode 12 here in a few days to update you on how we finished our week out trading, hopefully up. Because right now, that $150 range has kind of been our vortex. We can't get out of that 150 range. We're like stuck there. We get up into that 160. We just get a taste of that 160 range, and then something happens like this where we get a stock that'll drop and it puts us back down to that low 150s, and then we're trying to grow again. So kind of a pain. So hopefully here in the next week or so we can bounce out of that $150 range and get up into that 160 range and actually stay there. So hit that like button. Make sure you subscribe to the channel so you get updates when we put out new content. Otherwise, have a fantastic rest of your day, and thank you.